So if you are thinking of moving to Muskoka, in this video, we are going to show you around Muskoka and things to do here in Muskoka. If this is your first time on this channel and you want to know everything about living here in Muskoka, then subscribe below and tap the bell for notifications so you can be the first to know about the current market in Muskoka. We get calls and emails every day from people just like you, looking for help on making their move to Muskoka, and we absolutely love it. Whether you are moving in 9 days or 90 days, give us a call, shoot us a text, or send us an email. All of the information is in the description below, so we can help you make a smooth move to Muskoka. Hi everyone, welcome to my channel. I hope you are doing well. Just a quick background. I'm a full-time realtor working throughout Muskoka with buyers, sellers, and investors. I'm a realtor with eXp Realty, and I work with Rent, Live, Own. This service sets me apart from other real estate agents since no one else offers it throughout Muskoka. Rent, Live, Own gives families who make good money a chance to get into the market that can't get a mortgage through traditional processes. Okay, let's get started. Today we are going to be chatting with Dustin Vyner. He is a mortgage broker, and we're just going to be discussing the different aspects of his business, why you would want to go to a mortgage broker versus just to your local bank. And then we'll be finishing up with a little bit of discussion about the housing market. But we shouldn't be any longer than about 20 or 25 minutes. So we hope you enjoy the webinar. So Dustin, thank you so much for agreeing to come and join me on our first webinar together.
Yeah, for sure. Thanks for having me. So just a quick introduction. My name's Dustin Vyner. I'm a licensed mortgage broker in Ontario with DV Capital Corporation, and I've been in the industry since 2016.
If I am a first-time home buyer, what would I want to do to get ready to be able to purchase my first home?
Good question. So, it's always good to approach a mortgage broker when you are, searching for a home and you want to get into the market. So the difference between a mortgage broker and, let's say, a mortgage specialist at a bank is, they have very few options typically. And I just want to explain a little bit about what, licensed mortgage brokers have to, the requirements they have to meet in order to be licensed and stuff like that. So just a quick overview. So in Ontario, mortgage brokers are licensed and regulated by the Financial Services Regulatory Authority of Ontario, so FSRA. We must complete educational courses and we must undergo a review by the regulator. So there are also licensing fees, continuing education courses that must be completed, to remain licensed and in good standing. Also a big thing, we have access to multiple different lenders and their products. And we don't just work 9 to 5, we work around the clock. So why someone would call me in the first place. Mm-hmm. So just a quick explanation. I can arrange financing for, non-bankable situations. So less than perfect credit, unverifiable income, rural property, debt consolidation, someone needs a rush closing, new to Canada even, active or discharged bankruptcy or consumer proposal. Those are just a few reasons. So it's, we cater to, pretty specific situations that, banks typically shy away from. So that's just, those are just a few examples of how I can help.
Oh, that's awesome. Yeah, because not everybody fits in that, that box,
exactly.
Right? There's
exactly
complicated. We're all complicated, I think. So tell me, if I'm looking to purchase a home, I need a down payment, right? So what would I have to come up with? How does that work?
Yeah, it's a good question. So typically when you're purchasing your first home, you're probably not paying for it all in cash. So that's when a down payment comes into play. So on approved income and credit and an approved property type and location, you might be able to receive, bank financing to purchase a home with a down payment between 5% and 19.99%. So with these down payments under 20%, the mortgage must be mortgage default insured. So for for an insured mortgage, the down payment is actually 5% of the first $500,000 and 10% of any amount over the $500,000. So that's for default insured mortgages. Down payments of 20% plus, those are considered conventional mortgages and do not need to be default insured. And these can be financed through banks, alternative, and private lenders. And I just so since I touched on default insurance, I just want to explain what it is quickly.
Yeah.
So mortgage default insurance is basically put into place to protect lenders in the event of borrower default. So if the borrower, stops making payments. Also keep in mind that default insurance is not applicable for homes valued at $1 million plus. So basically the insurance premium is calculated based on the loan to value. You can pay it as a lump sum at closing, or it can be rolled into the mortgage payments. But keep in mind, if you do roll it into the mortgage, you also have to pay interest on the insurance premium.
Okay. Gotcha. Yeah. So let's say gone through all the process with you, and now I'm approved for a mortgage. I find out I'm approved for X amount of dollars. Now, what kind of mistakes do I want to avoid so that I don't screw up my mortgage before I actually buy the home?
Very good question. So since your approval, is largely based on income and your debt service ratios, any, major changes to your job and income, like, right after you get approved, let's say you quit your job, or, you take out a new credit card or co-sign for someone else's debt, like someone else's car loan, any of that will factor into your debt service ratios, which will, elevate them. And, this can possibly alter or, ultimately decline your approval if you make these major changes right after being approved. So, so it's always good to make sure your payments are always, up to date. And avoid major changes to your job and income right after being pre-approved and approved.
So don't go and buy that nice shiny truck that I've been looking for. All right, fine. Okay. What can you tell me about extra costs to my mortgage when I go and buy a home?
Okay, so
this thing called land transfer tax.
Good point. So yes, so land transfer tax is a major closing cost that a lot of people forget about when they're budgeting for their first home. Mm-hmm. So basically, land transfer tax is payable in Ontario when a property is purchased. This is calculated as a percentage of the purchase price. So in Ontario, we have provincial land transfer tax. If the home you're purchasing is in Toronto, you'll also have to pay municipal land transfer tax. So if the home you're purchasing is in Toronto, your land transfer tax will be double the amount for the same purchase price elsewhere in Ontario. So it is important to keep in mind when you're budgeting for sure. And I just want to also add that there's a land transfer tax rebate that first-time homebuyers can qualify for. So a first-time homebuyer might be able to receive a provincial land transfer tax rebate of up to $4,000 and a municipal land transfer tax rebate of up to $4,475. So, just another thing to, help first-time homebuyers step into the market.
Oh, that's awesome. We all need incentives, right?
Yeah.
So you touched on some of the different loans that you do. How might you use that in the different property types?
Yeah, so we can arrange financing for most property types throughout Ontario. So these include residential, commercial, industrial, mixed use, multifamily, land, even, in some cases, hotels, motels, and the odd case, gas stations, because there are very few lenders that cater to these types of properties. But yeah, for the most part, most property types throughout Ontario, we can finance.
Okay, cool. Now, if I want to do some renovations around my house, did we touch on this? And I want to use maybe I heard I could use some equity in my home.
Yeah, so that's a good question. So yes, a lot of what I do is home equity loans. So, people come to me, for example, they might have no mortgages on their property, or they might have one or two already. Mostly, we're doing home equity loans in second position, typically behind a bank mortgage. This is when, there is some home equity available and the homeowner, let's say they want to, take out some equity to do some renovations on their home, or even use it as a down payment for another property, or just really for any reason, accessing their home equity, to consolidate debt, anything like that, really.
And what about rates? How are the rates and how does that work?
Good question. So the two main types of rates that banks offer is fixed rate, which is when the rate and payment stays the same throughout the whole life of the term, and variable, which is where the rate can fluctuate based on the Bank of Canada's prime rate, which was actually just increased to 2.7%. So, and with private lenders, typically for the most part, they usually only offer fixed.
Okay.
Yeah.
And there's been some talk about rate increases. What does that mean? Like if some people maybe should be renegotiating their mortgages, how is it going to affect people in the future? And are we going to see big increases, or what's your crystal ball say?
Yeah. So with the rate increases, I feel like, well, ultimately it will make it more difficult, unfortunately, to enter the housing market and, for first-time home buyers to purchase and stuff like that. I'll see, I can see a lot of borrowers needing to maybe, go towards the alternative route or private financing route. But keep in mind, the down payments are the larger for the privates. But yeah, so it will make it harder for people to qualify at the bank for sure.
Okay. And I don't know if you touched on this, but I'd heard something about a stress test. What is that all about?
Okay, so yes. So the stress test is basically the banks see if you qualify. They want to see if you qualify for a rate higher than you would actually be receiving. The reason for this is so that, they want to see if, let's say, you lose your job or you do have a variable rate and the rates increase. They want to know that you'll still be able to afford your payments, your mortgage payments, realty taxes, heating, condo fees, if applicable. So yeah, the main purpose is they want to see that your annual income will be enough to support your mortgage payments. That's basically it.
So they want to make sure you're not going to default.
Yeah, that's a main focus. Yeah.
Gotcha. Well, that was awesome. That was a whack of information that is, I'm sure everybody will find very, very valuable.
Good questions. Yeah, you had great questions. Thanks. So yeah, why don't I ask you a couple questions now? Just
Okay.
So Lisa, why don't you just tell us a little bit about yourself?
Yeah. So I'm a realtor here in Muskoka. I work with eXp Realty, and I work with home buyers and sellers and investors. People who may look to rent to own is another specialty of mine. Personally, I play hockey. I've lived here since 1999, and I'm a volunteer with the Muskoka Victim Services, and I also am a part of a group that support other women through separation and divorce. So I've got quite a few passions.
Nice.
Yeah.
That's great. So tell me, why work with a realtor?
Well, a realtor is an expert in their field. They've gone to school. I mean, you're not going to let your neighbor, your brother, your sister do surgery on you. And the same goes for a realtor. I mean, you pay for what you get. We have the expertise and the knowledge of the market. We are objective, so we don't let the emotions of a buyer get in our way. We can, be real with you and say, hey, so just being objective. We have tons of connections, and as far as, inspectors and contractors and plumbers and you name it, lawyers, mortgage brokers, and we make it easy for you. Like, this is what we went to school for. This is what we do on a daily basis, and we do many transactions. So we're here to work in your best interest and take the stress away. We're going to negotiate on your behalf. And we just overall, we have more we have access to more resources than you have. So, we can even
Brilliant.
find, off market deals and things like that. So our networks are big. And so, obviously you would want to work with somebody who you trust. So not all realtors are the same, right? So in any career, any profession, you've got good ones and bad ones. So you have to find somebody who is trustworthy, who you can relate to, who's transparent and is going to serve your best interest. They're not just trying to double end a deal and get more money out of it, So we want to make sure that they are addressing your needs and your wants, and working on your behalf.
Nice. So tell me, how can I get into the market if I'm a first-time home buyer?
Well, I mean, it's tough. The very first thing that we need to ensure is that you get pre-approved, so we know what we're working with, right? So we can't go looking at $1 million homes when you're only going to be your budget's 400,000. So we have to make sure that that's first and foremost. So, and then we need to work at, just addressing those things. What exactly do you need? How, it's like a stepping stone. We may have champagne taste, but we only have beer pockets. So you might not get your dream home the first time round. So, you buy something to get into the market, because we know over time real estate increases, right? So you're going to build equity into that first home. And if you fix it up, then you're building even more equity. It's going to be worth more when you go to sell it. So you can do things like house hacking, which basically means you move in and then you might be able to rent out a room, or you might be able to turn it into, you might be able to have an apartment, and make money that way to help yourself. If you're a first-time home buyer, you might have to reach out to family and friends to maybe help you with the first time with your deposit. You might have to do a side hustle, but there's all sorts of ways that you need to be creative to get into the market today, and that is all it is being creative and reaching out to your to people so that you can obviously make the best choice for yourself.
Very good points, Lisa. So why are housing prices so expensive right now?
Well, we have a supply issue. There's just not enough inventory for our population. You could say that because of lower interest rates, more people are looking. Okay, that might have an effect. A booming population increase. Well, we have our natural organic increase in population, but we also have, many immigrants coming into Ontario and Canada on a daily basis. So we have all these people that are looking for houses, and we just don't have the inventory. We need to have 1.5 million homes built in over the next 10 years to make this a balanced market. So, we're not going to see a crash or anything like that, because we just don't have the supply. And in Muskoka, like, it's even, gotten worse. I know it's everywhere, but a lot of people are moving out of the city and they're looking to get out and just slow down and work remotely from home. So they're moving up to the Muskoka area and Cottage country. I don't see a downturn for quite some time. So if we're waiting on the market to change, it's probably not really going to change overnight. That's for sure.
Nice. That's all I really have for you right now, Lisa.
Well, you know what, Justin, I just want to thank you for joining me today, and you gave us some really great insight. And we're going to be doing some more of these interviews. We'll have more topics. We'll keep it shorter, but we'll really zone in, and who knows, we might even have some live ones so you can come on and ask your own questions. But if you don't have anything to say, I'm going to say goodbye to everybody. Thanks again for joining me, and I really look forward to working with you and doing another webinar.
For sure. Thank you so much, Lisa. Hope you all enjoyed.
Okay, take care. Bye, guys.
Bye.
Okay.